This is Lender Approvals. I'm James Vernon. In this tutorial, we answer the Reddit.com question, what are the advantages of buying commercial real estate with an LLC? But I modified the question to encompass why smart investors never buy commercial real estate in their own name. Before we go any further, do me a small favor. If you like our content, like, comment, and share this. It really helps YouTube and our channel in more ways than you know. So, thank you in advance. And we want to hear from you in the comments. Let's get started. Let me tell you something straight up. If you are planning to buy commercial real estate, or you already own some, and it is sitting in your personal name right now, I need you to stop whatever you are doing and watch this entire video. Because what you do not know about this specific topic is not just costing you money, it is putting everything you have ever worked for at risk. And I am not saying that to scare you. I am saying that because I have been exactly where you are, and nobody sat me down and explained this until I was already in the game and realized how exposed I actually was. So today, we are fixing that, right now, together. By the time this video is done, you are going to understand exactly why buying commercial real estate under an LLC is not just a good idea, it is the only idea. And more importantly, you are going to know exactly how to go set one up today. Not tomorrow, not next week, today. Let's get into it. Here is the thing I want you to understand before we get into the mechanics of all this. The information gap. Why nobody told you this. The reason most people buy property in their personal name is not because it is the right move. It is because nobody ever told them there was another way. The sophisticated investor, the one you look at and wonder how they built that portfolio, they learned early that the structure you buy in matters just as much as the deal itself. Actually, let me say that again because I want it to land. The structure you buy in matters just as much as the deal itself. You can find a perfect property in a perfect location at a perfect price, and if you buy it in your personal name, you have already made a critical mistake before the ink is even dry. And that is what today is about, closing that gap right now. What is an LLC and why does it matter? Okay, let's start from the very beginning because I want this to make sense for everyone watching, whether you have been in real estate for years or you are just getting started. If I over-explain, forgive me. LLC stands for Limited Liability Company. I want you to focus on those first two words, limited liability. Here is the simplest way I can explain what that means for you. Imagine you are standing on one side of a wall. Your property is on the other side. That wall is your LLC. Whatever happens on that property, lawsuits, debt, claims, damage, all of it stays on that side of the wall. It cannot cross over and touch you, your personal bank account, your personal home, your personal savings, your personal credit, nothing. Now imagine buying that same property with no wall, no LLC, just you and the property and your name on everything. Now everything is connected. A tenant slips and falls. They sue. They are not just suing the property, they are suing you, your personal assets, your savings account, your car, your other properties if you have them. Everything you have built is now on the table. That is not a hypothetical. That happens to investors every single day who did not know what you are learning right now. The 5 advantages, and these are actionable. Advantage number 1, liability protection. Commercial real estate is not residential real estate. The stakes are higher. The tenants are businesses. The foot traffic is higher. The potential for something to go wrong is higher. And the lawsuits when something does go wrong? Significantly higher. When you own commercial property under an LLC, and a tenant's customer slips in the parking lot, or there is a fire, or a contract dispute with a business tenant, the lawsuit is directed at the LLC, not at you personally. Think of it like this. The LLC is the quarterback taking the hits. You are the team owner sitting in the box watching. The quarterback can get sacked. The owner goes home untouched. That separation is everything. Tax advantages. Advantage number 2, tax advantages. This is the one that makes people lean forward in their chair when they really understand it.
When you own commercial real estate under an LLC, the IRS treats that entity as what is called a pass-through structure by default. That means the income from your property passes through the LLC directly to you and is reported on your personal tax return. But here's where it gets interesting. Every expense connected to that property, the mortgage interest, the depreciation, the repairs, the property management fees, the insurance, even your travel to and from the property for business purposes, all of it becomes a potential deduction. A legitimate business expense that reduces your taxable income. And commercial real estate depreciation schedules are extremely favorable. We are talking about being able to depreciate the value of the building over 39 years, which means every single year you are getting a paper loss that reduces what you owe the IRS, even while the property is actually gaining value and putting money in your pocket. You are making money and showing a loss at the same time, legally. That is not a loophole. That is the tax code working exactly the way it was designed to work for business owners and investors. The person buying in their personal name, they are leaving that entire conversation on the table. Advantage number 3, scalability and fundability. And this one right here is the one that changes everything for you long term. So I need you to really hear this. Typically, most people can only buy one property in their personal name. Now there are exceptions, of course, but especially if they already have a house. I want you to understand why, because this ceiling is invisible until you walk right into it. When you buy in your personal name, the bank looks at your debt-to-income ratio. That means they look at every single personal financial obligation you have. Your mortgage, your car note, your student loans, your credit cards, all of it. And then they look at your income, and they calculate how much more debt you can personally carry. And at some point, property 2 or property 3, that bar hits red. The bank looks at you and says, the math does not work. You are done, personally tapped out. Even if your credit score looks fine, even if you have been paying everything perfectly on time. The debt-to-income ratio does not care about any of that. That is the ceiling. And for most people who already own a home, that ceiling is closer than they think. Now here is what changes when you buy under an LLC. The LLC builds its own credit profile, its own financial history, its own bankability, completely separate from your personal credit. So now you have 2 engines running instead of one, your personal credit and your business credit working simultaneously. But it gets even better than that. You can actually fund the LLC before you ever purchase a property. Business credit lines, business funding products, all of it goes into the LLC first. Then the LLC becomes the purchase vehicle. You are not going in with just your personal credit and personal savings hoping it is enough. You are going in with a funded business entity that has its own financial weight behind it. And then, once that property starts to perform and build equity, here is where the real scaling begins. You pull equity out of property 1 through a refinance or a commercial equity line. That equity becomes the down payment on property 2. Property 2 builds equity. That equity becomes the down payment on property 3, and on and on. That is not luck. That is not a secret. That is a structure. And the LLC is what makes that structure possible. Because you are not hitting a personal credit ceiling every single time. You are building a business that funds itself forward. That is how investors go from 1 property to 10, not by having more money than you, by having a better structure than you. And now you know the structure. Privacy and anonymity. Advantage number 4, privacy. When you buy property in your personal name, that purchase is public record. Anyone who knows how to search property records can find your name, see what you own, see what you paid, and see exactly where to find you if they want to come after you legally. When you buy under an LLC, the property is owned by the company. Your name is not on the deed. Your personal information is not the first thing a plaintiff's attorney finds when they start digging. Wealthy people have understood the value of privacy for a very long time. This is one of the main tools they use to maintain it. And we are going to talk about how to set up your LLC in a state that gives you maximum privacy in just a minute.
Estate planning and transfer advantage number 5. Estate planning and easy transfer. This is the long game. And I want you to think about this one carefully. When you own property in your personal name and something happens to you, that property has to go through probate. That is a legal process that can take months, sometimes years, cost significant money in legal fees, and create real stress for your family during an already difficult time. When you own property inside an LLC, you can transfer ownership of the LLC, which transfers ownership of everything inside it, by simply transferring membership interests. No probate, no long legal process. Your family gets what you built without the system taking a bite out of it first. You are not just building wealth, you are building transferable wealth. There is a difference. Okay, this is the part where I need you to actually grab your phone or open a new tab on your computer. Because everything I am about to tell you, you can execute on before this video is even over. Here is exactly how to set up your LLC for commercial real estate investing. Step 1. Choose your state. Now here's something most people do not know. You do not have to form your LLC in the state where you live. You can form it in any state in the country, and the state you choose matters because different states have different laws, different levels of privacy protection, and different annual fees. My personal go-to for this is Wyoming, and here is why. Wyoming has some of the strongest LLC protection laws in the entire country. It has no state income tax. It offers strong anonymity, meaning your personal name does not have to appear in public records. And the annual fees are some of the lowest you will find anywhere. If you live in California and you want to buy commercial property in Texas, you can still form your LLC in Wyoming. You would then register it as a foreign LLC in Texas, where the property is located. That sounds complicated, but it is actually a very straightforward process, and your registered agent handles most of it. Step 2. Use a registered agent service. When you form an LLC in a state where you do not physically live, you need what is called a registered agent. A registered agent is basically an official address and point of contact for your business in that state. They receive legal documents, official notices, anything that needs to be formally delivered to your company. The service I personally use and recommend is Northwest Registered Agents. And I want to be straightforward with you about why. You have probably heard of LegalZoom. Northwest Registered Agents does the same thing at a fraction of the cost, and honestly with better customer service and faster turnaround. We are talking about forming your LLC for around $39 plus state fees. They walk you through every single step. They handle the paperwork. And they are serious about protecting your privacy, which matters for all the reasons we just talked about. You go to their website, you select Wyoming, you fill in your basic information, they handle the formation documents, and you have your LLC. The link is in the description. Go use it right now. Step 3. Get your EIN. Once your LLC is formed, you need an EIN. That stands for Employer Identification Number. Think of it as the social security number for your business. You need it to open a business bank account, apply for financing, establish business credit, and file taxes. You get it directly from the IRS website at irs.gov. It is completely free. It takes about 10 minutes online. You fill out the application and you get your EIN immediately upon completion. Write it down, save it somewhere safe. You are going to use it constantly. Step 4. Open a dedicated business bank account. This step is non-negotiable, and I cannot stress this enough. Every single dollar that touches that commercial property needs to flow through a dedicated business bank account under the LLC. Rent coming in, mortgage going out, repairs, insurance, property management, all of it. Through the business account. Always. The moment you mix personal and business money, you create what lawyers call piercing the corporate veil. And that means in a lawsuit, an attorney can argue that your LLC is not a real separate entity because you are not treating it like one. And suddenly, that wall we built has a hole in it, and your personal assets are exposed again. Keep it clean. Keep it separate. Always. No exceptions.
5. Start clean bookkeeping from day 1. You do not need to be an accountant for this. You need a system. Whether that is QuickBooks, Wave, which is completely free, or even a well-organized spreadsheet to start, every transaction gets recorded. Every receipt gets saved. Every expense gets categorized. Clean books protect you at tax time. Clean books protect you if you are ever audited. Clean books make you look like a real business when you go back to a lender for your next property. And you will go back. And they will ask to see them. Let me paint you a picture of what this actually looks like when it all comes together. You find a small commercial property, a strip mall unit or a small office building. Purchase price, $300,000. You form your Wyoming LLC through Northwest Registered Agents. You get your EIN. You open your business bank account.
you fund the LLC, and you purchase the property under the LLC. Now, here is what your position looks like. Your personal assets are protected behind the LLC wall. Your property expenses are legitimate business deductions, reducing your tax liability. You are building business credit history under the LLC that will help you qualify for your next property. Your name is not publicly attached to the asset, and the equity building inside that property is already becoming the fuel for the next purchase. That is one property becoming two becoming four. Not because you got lucky, not because you had more money than everyone else, because you had the right structure from day one, and it all started with forming one LLC. Today, I have a free guide called From Bad Credit to Bankable: 6 Steps to Buy Your First Property the Way Banks Want to See It. It covers the credit audit, the corporate setup, business credit building, fundability, all of it in a format you can follow and act on today. Both links are in the description. The guide is completely free. The LLC formation is faster and cheaper than you think. Grab both. Start today. And if this video gave you something you did not have before you pressed play, hit subscribe and share this with someone who is about to buy property in their personal name without knowing what they do not know yet. That share might be the most important thing you do for someone today. Drop a comment below. Tell me what state you are in. Tell me if you already have your LLC or if today is the day you are setting one up. I read every single one. The difference between the investor who builds a protected, tax-advantaged, scalable portfolio and the one who buys in their personal name and hopes nothing goes wrong is not intelligence. It is not luck. It is not connections. It is not even money. It is information and a decision. You now have the information. The decision is yours. Form the LLC, get the EIN, open the account, keep it clean. Then go get the property.